the demand side. So let's look at that. The demand side can be illustrated by the amount of units that we sold in the MLS. Say in 1986, we were selling 3,700 units that year. Okay, last year, we sold 4,900 units. About the same amount that we were selling back in 1998, 1997. All right? We permitted 879 units of single family. So the permitting of housing kind of follows demand of housing, doesn't it? What is going on is, as the sales have dropped off, obviously permitting has dropped off. But there's some other thing. Does that mean people are going away? Or does that mean people are leaving? Do we have out-migration? No. What we can do is we can look at another chart. And what I'm going to do is look at multifamily, because that's a good indicator, because I'm not going to build an apartment building if I cannot have somebody move into it and pay rent. Because it's a business decision. When we build apartment units, it's a business decision. I got to have cash flow. I have to have financing. I have to have the ground. It has to be affordable. The labor has to be affordable. So when I get done building that structure, the rent that comes in can cover the costs going out. So it stands to reason that if no one's renting, or you have too many units, or no one's moving into Spokane, you don't build a lot. Same goes true when you build a lot, you must be having people coming in. So what I like to do is say, hey, well, let's look at the vacancy rate of these units. Because we can't just look at new construction, we can't just look at sales, we can't just look at all these things independently. They all work together, especially rentals, because rentals are very fluid. 20 days notice, these people are up and gone. Versus a house, it could take somebody a year to get into a position to sell or buy, right? So rentals is what I call the canary in the coal mine. Back in 1986, we were running a nice, healthy 8.7% vacancy rate. So if you had a unit of 100 units, 8.7 of those units on average would be vacant. These numbers are pretty accurate. You know, our property management division I check our vacancy rates to the vacancy rates that are provided by Washington State Center for Real Estate Research. And we parallel them, and our vacancy rates are based on a cross-section of houses, duplexes, fourplexes, and multifamily, large multifamily. So these numbers are fairly accurate for the whole city, not just multifamily big units, okay? So right now, last year, we ended the year at about 4.6% vacancy rate. In the middle of the summer, it was about a 3.8. What had happened? Well, what I think happened is we had people that were selling houses that chose or that could not sell them because of lack of buyers and turned them into the rental market. Because we saw it right in September, October, we saw an inordinate amount of move-outs in our property management sector. And we tracked a lot of these folks to underpriced rental houses that were for sale. So people wanted their houses to be covered through the winter, which they were probably happy after this winter. They wanted people in there, and they weren't full-time professional landlords. And so there's something that's going to happen there too, because you have a whole jump of people, or a whole ton of people that moved out a year or 6 months ago into these rentals, and they could theoretically come back on the market, and these people could be out shopping again for housing or rentals. So that's another little, side tangent of some population movement. But the bottom line is, if it's 5%, around 5.5%, we call it a balanced market. That means you don't see a lot of rental increases during this period. When the rents drop down below 5%, the landlords have the leverage to raise the rent. Conversely, if the vacancy rates are above 5%, for this period here, from about 1994 to about around 2000, the landlords could not raise the rents. And we also saw a little bit of reduction in construction. And let's look at that. So what happens is when you don't build anything, the vacancy rates drop down. And when you start building a bunch of stuff, the vacancy rates go up, right? You flood the market. And then you find your medium, and then the population kind of fills it in. We saw a little spike here in 2004. The only reason we saw that spike is because they changed the building codes. And everybody that had plans submitted their building plans for permitting prior to the new code taking in effect. And that's what that spike illustrates. But what did it do to the vacancy rates? Nothing. This is a good indicator of population growth and stability. So we've got, even with the increase in building permits for multifamily, because we see people choosing to rent that can't buy, and the market's seeing that, we still aren't seeing a real huge rise in vacancy rates. So we don't see out-migration. We're not like Detroit, where jobs are drying up and people are leaving. Hey, guess what? Jobs are drying up. We saw there's one company that's closing down out in the valley, right? But I know personally from talking to a few of you guys who are in a position where you have to be confidential about the clients you're working with, there are some other opportunities that are moving in. So as an economy changes, Spokane is still a very livable place, and we still will have growth. We just can't talk about it yet, right? But it will happen. Everything is okay, and that's really what I'm going to be talking to you about. Everything is very stable here. This is my big projection that talks a little bit about, okay, new construction, let's really analyze it for a second. And what I've done is I've taken this purple line on the first quarter of 06, we basically permitted 550 houses in that first 3 months of 06. All right? Well, the houses are generally finished in about 4 or 5 months. So we move that line over here to the third quarter of 06, and we say this is how many units then will be available for people to move into. But not all of those are going to come to our market, to the multiple listing service to be sold. A lot of these guys are owner builders, customs, whatnot. So I say, okay, well, 20% or 60% of the people, 60% of the people are going to make, or 60% of the product will make it actually to market. And so out of these houses, we'll only see maybe 300 that quarter out of the 500. And on it goes. So basically, by the time we get to, let's look at today, the fourth quarter of 08, there were a total of, purple, fourth quarter, there were a total of 300 homes that would have theoretically come on the market on the fourth quarter, yet probably only 200 of them made it to market in the fourth quarter. But knowing what is permitting right now, the fourth quarter only permitted, so we know what came on the market. Now let's see what's going to be coming on the market. We see a permit of around 180 units. That's for a 3-month period. The fourth quarter of 08, 180 units were permitted. That's 60 houses a month were permitted. We can project forward and say the second quarter of 09, we should see 180 houses finished. But when I say 60% make it to market, I'm being very generous. It may only be 40%. But using 60%, we'll have less than 100 houses. Yeah, less than 100 houses coming to the market the second quarter of 09. What's the second quarter of 09? Spring market. So we're going to have theoretically 100 houses, new houses coming on. Oh, this black line is how much we actually consume that quarter of new houses through the MLS. We're consuming about 220 homes a quarter. And we've been consuming 120 homes a quarter when there's been only less than 200 homes a quarter coming on the market. Okay? So there's an overhang that's being absorbed. And at what point, for example, a year ago, we had 620 houses on the market at the beginning of the year that were brand new. We don't know if there's ghost listings, or we don't know, but we just know in the MLS 160 or 620 homes, and that would be areas 10, 20, 30, and 40, half acre and less, were on the market. Right now there's about 440 homes on the market. So we've seen a reduction of about 25% of the new construction inventory